Hello, Warriors. We have a special treat today. I'm joined by Carley Garner at Carley Garner on Twitter. Carley, thank you so much for joining us anonymously from your
Sorry.
studio, from your offices at home. And,
Yes.
really great to have you here. I've interviewed Carley several times over the last couple of years, and her forecasts have been really elite, and her work is featured by Jim Cramer on his shows. She's also on the street, has been on Bloomberg, on CNBC. Every possible financial outlet wants to show Carley's work because it edifies their viewers. So appreciate you being with us here today, Carley. I'd like to start off with, since we are on a different channel, how you got into the industry and possibly what you were doing prior and what your first gig was in the trading business.
Okay. Well, thanks, Dale, for having me. It's a pleasure to be here. If I ever do this channel again, I will be. I'll have the camera up and running. I apologize for that.
That's no problem.
So I've honestly here's kind of my story. It's not very exciting. I was a professional college student for about 7 years. I switched majors. I all kinds of stuff. Finally figured out what I thought I wanted to be, and I thought I wanted to be a stockbroker or investment advisor. And so I got a degree in accounting, I got a degree in finance, and I was on my way doing an internship, and I absolutely hated it. I just loathed it. I'm not a salesman, and that was really
Yeah.
all it was. It was a glorified
What
sales job.
what they do? Give you a Coles directory and say dial
Yeah,
B's today?
pretty much. And it just wasn't for me. And I felt like, I mean, the goal was basically to sell loaded mutual funds. And I just feel like there wasn't any value add. It just wasn't for me. I'm not saying that's, no offense to anyone that does that for a living. It's an honorable living, just wasn't for me. So
Okay.
there happened to be, I was just kind of browsing the internet. There happened to be a commodity shop in town, which is rare. If you've ever been on the West Coast, nobody trades commodities. It's like when I tell people what I do, they literally have absolutely no idea what I'm talking about. If you go to
Right.
Chicago or New York, people know. Here, nobody
Yeah.
knows.
Okay.
So anyway, there happened to be a little shop in town. I'm like, well, you only live once, give it a shot. And I've literally just dove right in and been doing it ever since, and I've loved it. I mean, it's a tough business. There's ups and downs, that's for sure. But it's been a good ride.
Okay. Yeah. Really, anyone who takes this journey, God bless the broken road that got them to where they are now.
Exactly.
And you really do have to live through adversity. I too, came from being a broker, Series 3 broker, and you build books, and then there's
Mhm.
mistakes, and then you have to rebuild books. It's an ongoing process, and there is a
It
lot
is.
of sales into it. And
Hmm.
fortunately, in this new era that we have here, we can share our content without commuting and get broader coverage where we don't have to use a phone like we used to. I spent endless hours prospecting. In fact, on a Saturday, I'd get up at 5 in the morning because I'm on the West Coast and start calling my leads on the East Coast and work all the way till 1 towards the
Hmm.
West Coast. So I'm very grateful.
Yep.
I don't have to do
Sounds
that
familiar. Been there, done
anymore
that. Yeah.
anymore. So okay, yeah, I was just, I was talking to some of the people in my other place about and my friends how much my natural gas bill has gone up this year with the prices that we're having here in Nat Gas, over 30% higher from last
Mhm.
year. I guess our utilities here in California probably put long hedges on up at your upper levels, up at 10 and a half, and they're passing it on to us. So uh, tell us what you're seeing on the Widowmaker.
Right. So natural gas has a really nasty habit of selling off into the end of the year. And then a lot of times that's kind of the low point of the year. So we saw this. This is December of 2021.
Okay.
Now, once we got into January of 2022, things were already firming up. We're not quite to that point yet, but seasonals they're not perfect.
No,
They're messy, sometimes
nothing
early,
is.
sometimes late. Nope,
Yeah.
absolutely. So I believe that this is a pretty substantially well, let's just call it a relatively high probability time to be a bull in natural gas. It doesn't feel that way because we're literally just melting below before our eyes, but that's how natural gas works. It's usually not a slow, quiet bottom. It's usually, run all the cell steps, squeeze out all the longs, and then it can go up. And I think that's what we're doing. We're up against the 200-day moving average. I'm sorry, 200 week. This is a weekly chart, by the way.
Okay. All right.
Um, and it's really ironic because when gas prices were up in the nines and tens,
Yeah.
people were scrambling. You should have seen the option chains. People were literally spending thousands of dollars on $20 strike price calls with
Right.
30 days to go. I mean, just insanity. And now we're kind of almost seeing the opposite of that. Nobody thinks natural gas can go up now. Everybody's
Right.
decided they're bearish. And so it feels to me like we're kind of at the exact opposite of what we saw here at $10 gas. I think 4 to 350 gas is probably just a little bit extreme, especially we believe the Freeport LNG port will be coming back online sooner rather than later. I know the market's kind of given up on it, but that's probably when it's closer than not. And we're coming up against some support lines. And I think if anyone, I'm actually, believe it or not shocked to see $4. We kind of thought this would happen, not because of any fundamental reason, but just because that's how gas works. It sucks in all the longs and then ruins their life and then goes back up. So
That's why they call it the Widowmaker.
it's exactly why.
So, I know that you trade mainly options. So how's the liquidity in Nat Gas and the bid offer, the spreads on Nat Gas options?
I mean, nat gas options aren't the most liquid in the world, but they're definitely tradable. I'll give you a couple warnings though. Like the bid-ask spread, it gets confusing, and most people don't realize there's actually two option chains in nat gas written against the same futures contract. There's a European style and an American style. It's kind of a unique market in that it has the two chains. I wish it didn't because it basically divides the liquidity into two different option markets, which is not ideal. The European options are a little more liquid than the American. With that said, regardless of which one you choose, the bid-ask spread's generally only two to 5 ticks. So we're talking $20 to $50. It's definitely tradable. It's not something that should keep you out of the market. The warning I'll give, and most people don't realize this, is when you pull up an option chain, you're generally looking at market makers bids and offers. They're not other retail traders. If there were no market makers and you were only looking at other traders bids and offers, you'd basically see like a couple quotes on the whole chain. There wouldn't be much there. That's just how these things work, because traders are mostly getting in and out, not at market prices, but maybe paying the ass, selling the bid. So they're not working orders that are sitting there that you can see the bid ask for. So the market makers in nat gas are pretty good at what they do, but it's not like other markets where, for example, if you're looking at gold options, 23 hours a day, you're going to see bids and asks, and they may be a little wider at night, but you can still easily trade them. In nat gas, there are definitely periods during the middle of the night, 5-6 hours, that there's no bids or offers. So you have to be aware of that. Don't panic. You can usually, if you throw an order out there at a reasonable price, they'll usually take it. But most people panic because they feel like they're trapped, and then it just kind of feeds their emotions, and that's never a good thing.
I used to like when markets close, Carley. I don't know about you.
I miss it. Oh man, I miss it.
I had to turn into a nocturnal creature, especially going to FX at 24/6. You don't get a lot of gaps like you would get when the market would close and there'd be some kind of news. Gaps were an important part of my technical work. So I'm just reminiscing anyway. So this is one of the last holdouts of specialists that want to take the afternoon and evening
take a little time off. Yep, exactly. And I think it partly has to do with, like you said, it's the widowmaker. So you can imagine trying to make a market in the middle of the night in a commodity like this is a little bit dangerous.
Yeah, and if you did that, you may not end up being passing away and leaving a widow, but you might get divorced if you have to get up in the middle of the night all the time. So
exactly.
Let me ask you, how much time do you buy? How far out do you go on an option trade that in a market that hasn't bottomed yet, that may take some time to develop. I don't know about you, but in my career, things always seem to take longer than
Oh,
I think they will. So how do you
absolutely.
approach that?
Absolutely. You're absolutely right. It almost always takes longer. And that's the hard part about trading. It's hard enough to pick the right direction, but then to do it in a particular time frame. And that when you're trading options, time frame's a big deal. We're actually using the April, if just specific to natural gas, we're
Okay.
using the April options.
Okay.
Um, Let me pull them up here. I don't know how well you can see them, but I can give you like time frames. They have about 80 days to expiration. That's pretty typical. We're usually going 2 to 3 months out
Okay.
for options because that what we're doing in natural gas, we actually put it out an idea on, we did it actually to our clients, and we also suggested it on Bloomberg as a paper trade. I mean, we're not trying to tell people everybody should be trading natural gas because honestly, most people shouldn't. But for a paper trade, it's something to look into. But what we're doing is basically selling April puts because the puts have gotten really expensive, obviously, on the sell off. And the idea is if you sell, let's say, a 350 or a 320 put, you bring in 2, 3, 4 grand, depending on the strike price you choose. And the idea would be you want to be long from that area. So eventually you would take delivery of the futures contract. Um, the thing to know about natural gas is there's options and futures expiring every month. So it's a little more complicated than if you did that with a stock, like Tesla stock or something, you sold
Yeah.
a put with the idea of I want to be long from this price. You could just take delivery of the stock and hold it forever if that's what it came to. In commodities, it's not like that. And even in natural gas, it's even worse. In natural gas, like if we, let's say somebody sells a 350 put and the market's below 350 at expiration, you'd be assigned a futures contract long from 350, and you'd basically have to almost immediately get out. You'd literally have like
Yeah.
a day to get out. But our thought is the April and May contracts generally mirror each other. So if it came to that, we would basically just roll into May immediately and hold the position with a long future because we do think that these areas are really good buys, and we might as well take the premium in up front.
Okay.
And so
So
that's our idea.
so you're
But
the
yeah,
house. You're the house on this
that's
one. You know.
that's the goal. Yeah,
Yeah, because options are like relationships. 90% of them expire worthless.
that's true. That is true.
Have
Never
you heard
thought of
that
it
one
that way.
before? That was
I
in
have
my
not. That
cynical
was a new
days.
one. That was a
Anyway,
new one.
in my more cynical days about humanity, I've changed a little bit in 20 years. But so, okay, Nat Gas, something to keep an eye on.
Mhm.
Uh, what else is on the menu?
So the other market we've been doing a lot of um, eyeing and talking about is crude oil. I think that's on everybody's radar.
Yeah,
So like let me just adjust this a little bit here. So my basic premise in oil is we've had two black swan events that pushed oil outside of its comfort zone, outside of the range it normally would have traded in. So in my view, this is a weekly chart. The range started in about 2018, late 2018. Had we not had COVID, which is this area
right,
here, and then the war, which is
right.
this, we probably would have just minded our own business and traded in this channel. And so that channel to me suggests that oil should, at least for now, assuming there's not any, maybe we get 3 black swans. I don't know,
Yeah,
but
what could be a bearish black swan? You ever think about it? What would be a bearish black swan? Would it be
well,
peace, peace in Ukraine?
I'm not sure that would even do it because we do still have some supply constraints. But
Right.
the thing is, we don't know till we know. Like I would have
Yeah.
never, this whole COVID thing, I mean, that was just a complete shocker.
Yeah.
Who would have
Yeah.
saw that? So I don't think we'll know until we know. But assuming we don't get anything really insane, I think we stay between about 70 and 95, which is what this weekly chart would suggest.
Okay.
Now that we're back in this normal range. That said, I've been saying this, I said this yesterday on Bloomberg as well. Oil doesn't always follow the rules. It's messy. It colors outside the lines. So I would, if I were looking to be a bull in oil, which I am, I would leave plenty of room for just kind of a washout to 65. That's the 200-day I'm sorry, 200-week moving average.
Yeah.
Um, it's kind of where this bull market started. If you look all the way over here.
Yeah.
So and honestly, everybody and their dog was talking about a couple weeks ago when oil bottomed out around 70, the premise was China's reopening, we should be long. And then everyone's also saying, well, the Biden administration is going to refill the SPR at 70. So everybody should buy there. And it happened, but it fizzled out. And my guess is we run sell stops below
Oh,
70. And kind
I
of,
thought President Biden's limit order was in at 65.
you know what,
Am I wrong about that?
well, they've actually thrown out a few numbers. So
Okay.
you're not wrong. They've
Okay.
kind of waffled around a little bit. But I think 65 is the place to get comfortable and maybe aggressive. But you have to be careful. Look at oil over here. Nobody saw
Yeah.
oil dropping from 60 to negative. So,
Yeah.
just mind your
First time in
risk.
my career I saw a negative price on futures. So
Same.
how are you going to approach this with options? You're going to be selling puts like you are in natural
Mhm.
gas, or some type of
Well,
some type
yeah,
of full spread where you're taking in some premium to cut the cost of the calls?
sure. So it depends on what options look like if and when it does happen. But what we're thinking in advance is we'll probably do some sort of a call spread and then sell a put to pay for it. So that's the
Okay.
idea. So if everything works out perfectly, we'd love to sell maybe like a 50 put and use the proceeds to buy some sort of call spread.
Okay. So this is a pro, everyone. The key is planning your trades and visualizing, living in the future, that if this happens, these are your actions. So we're not even in the zone, and Carley is already setting up her strategy. So then when the market's there, she's not analyzing, she's executing. So, okay.
Yeah,
Interesting call there. Go
the
ahead.
goal is to not think. We get into trouble when we think about things, right? That's the goal.
Yeah, with the things in our heads. Yes.
Exactly.
Okay. So a couple of energy ideas. What else is on the?
All right. So the other market we're watching, which has been a bit of a nightmare for a lot of people, regardless of the direction they've chosen. Let me see if I can get this.
Okay, wheat.
Yeah, this is wheat. So
Yeah.
wheat, you can kind of draw the same type of weekly chart where if we didn't get this, hopefully you can see that as kind of a messy chart.
There's the war again, like crude. It almost looks like the crude chart.
Exactly. So it would have, without that war, we probably just kind of mind our business between about $8 on the downside and $10 on the upside. And it broke out of that temporarily. Now we've fallen back in it. We've had this really severe liquidation event. Wheat's complicated because it became very popular on a lot of the mobile apps that the kids are, I say kids, but what I mean is just people that aren't necessarily seasoned investors. So for example, like Robinhood or Webull or something like that, they have heat maps and they see which ETFs are getting the most action and moving, and people just literally, they see the wheat ETF on their radar, on their app screen, and they literally just throw money at it without understanding what they're doing. But what happened with that, and we saw that when Russia invaded Ukraine, the commodity markets aren't nearly as deep as stock markets. So you saw what happened to stocks like GameStop and AMC. Well, we got the same thing in wheat, but only to a bigger, in a bigger way, because the wheat market just really cannot absorb all those dollars. So when somebody buys a wheat ETF, the ETF takes in the money and then it uses that money to buy futures contracts. And there's rules. They can't just like sit on the cash. They actually have to have so much invested. So they literally are forced to go in and buy futures regardless of price. And making it worse, futures contracts have price limits. So this rally in wheat here, I think there were about 6 limit up days in a row. And so it was a situation where all this money needed to be long wheat because of rules, because of risk hedges, because of all kinds of reasons, but only a handful of contracts were trading every day because we kept hitting the price limits. So it's just completely distorted by speculation and panic.
For the shorts.
Total nightmare.
When I was a runner on the floor, I remember limit days in the meets all the time. Pork bellies were the biggest pit.
Yeah.
When I was on the old CME floor. So
yeah.
What a helpless feeling.
It's awful.
When you're in a position and you can't liquidate it because they're locked.
Exactly. And then you can imagine the emotions that come with that. So it just really, I'm not a big fan of price limits. I think they should just let it run. I know it can be really nasty sometimes, but I feel like the limits exacerbate it. But then again, they don't care what I think. But I have a horror story about this particular wheat run here with all those limit up days. We had recommended that our clients get into call ladders. So we were long calls and
Yeah.
we were long one call and short two calls. And we had the we had the insight, or the maybe we were just lucky, I don't know, but we bought futures against our short call in time. So in theory, we shouldn't have had any upside risk whatsoever. We were covered. And so should have just been like a fun ride, or not even fun, just we wouldn't have been making money. We just wouldn't have been losing money. But what happened was the options don't have price limits and the futures do. So the options were gaining $1 to $1.50 a day, and futures were only gaining 75 cents. So in a trade that we literally should have had zero upside risk, we were just shredding money every day. It was very unpleasant.
Now,
So
what a mind, you know
yeah,
what? Yeah.
yes,
So
it was
yeah,
bad.
even when you're right and you have everything done, there's
Yeah.
some type of exogenous event
Mm-hmm.
that we have to be prepared for everything all the time,
Yeah. Yeah. Yeah.
all the time.
It was humbling, and there were some good lessons learned. So that's all I could say.
All right, so I personally think that the grains, especially once a dollar really gets in gear to the downside, I don't know, I'm older than you,
Mm.
but the beans actually look better to me. I like all the
Okay.
grains. I'm
All right.
actually saying that people should build a silo in
Mm-hmm.
their backyard and
Sure.
take delivery of these grains. And if you're a charity, you can give them away because I think they're
Yeah.
very cheap right now, and that supply issues have not changed. In fact,
Mm-hmm.
I've dug in. I rarely look at fundamentals. To me, it's all about price action, but
Mm-hmm.
production in Russia, Ukraine is supposed to fall another 300 tons next year. The wheat that they're shipping out is very low quality wheat, maybe not even fit for human consumption. It's been sitting in their silos for a long time. Just the weather everywhere. I guess South America, Argentina is what saved. Well, broke the wheat market, and maybe what's happening in the U.S. But uh, there there is a possibility that we shift from La Nina to an El Nino, and that the drought spreads towards our own bread basket.
Mm-hmm.
Remember when beans, the chant on the CBOT used to be beans in the teens? They used to,
Yeah, I
because they
do.
had
I
never
remember.
traded. All right, you're okay.
Yeah,
You're
I do.
30 years younger than me. So, but now we're in the teens all the time.
Yeah.
And
Now it's stuck here. Yep.
yeah, so wheat is your preferred long between corn and beans?
I prefer wheat just because it's in my view cheaper. I mean, we started at 14. Now we're at low of 7 a couple weeks ago.
Yeah,
Chart
cut in
wise,
half. Yeah,
yeah, chart wise, I think fair value is somewhere between 8 and 10. And so
okay.
the problem is with wheat, we tested 8 at the end of last week, and there was some window dressing going into the end of the year, technical resistance, and it just kind of all fell apart. But I think if you give it some time, we'll start making our way back in, into the nines. So I prefer wheat. Corn, we actually we're a little worried about corn because going
Yeah,
into
that
the end of
doesn't
the
look as
year,
good. Yeah,
yeah. I mean, I'm not saying I'm bearish corn. I think short term I'm bearish corn. But we
okay.
were looking at this pattern last week, and we were trying to warn people, make sure you have some puts out there. The puts were really cheap. So we have some grain hedgers, and it was just a really great time to make sure you've got puts in place just in case.
Okay.
Um, and I
Could
think
fall
that
that blue line.
it
Where's that
could.
come in?
Yeah, so this is about 650. This is the March contract. If it breaks
Okay.
650, honestly, we probably get all the way back down to about 6. I would be a bull at 6.
Oh, that'd be a
650.
great buy. Yeah.
Yeah, 650. I'm like, yeah, I'm not sure I get aggressive either way. I would just wait and see. But at
Okay.
$6, that's a place I think you're right. I'm not saying you're not right. I think they're good buys, but just
Yeah.
buys on dips for now.
Everything's timing. Do you have a view
For
on
sure.
silver? Last time we got together, you and I talked about it. It made some upside progress, but looks like a breakdown to me. And I believe you're talking about the $21 level as being very key on any pullback in silver. Maybe we're
Correct.
going there now, Carley.
Maybe. So we're basically, this is kind of the major trend line. And again, these are these trend lines have been messy the last couple of years because this is the COVID fallout.
Yeah.
And then now we've got this Fed liquidation and all this stuff going on. But this is basically what the trend line probably should have been if you take all the craziness out. And we're right on it. So 24 is pivotal.
Yeah.
I would say the fact that we popped above 24 and closed below it, especially if we close below it on Friday, probably suggests we go back down and retest, like you said, the 21 area. But I think ultimately, I think these are buys on dips. So
Okay.
just be careful chasing it. But I think that's the right thing to do.
Yeah, your number you're talking about, this a weekly chart. So if something that I teach and are 2-week reversals, where all you do is count back 2 candles from today's candle. And if we close under that close, it's a 2-week reversal. I think it comes in about 40 cents higher at 73, 24. So, yeah. Well, just back 2 candles. It was a green candle, but it looks like a 2-week reversal here.
Yeah, I think you're
anything else you want to wrap it with?
Not really. I mean, we can just I'll just point out the dollar chart just as a reminder. So we're getting some dollar strength here the last couple of days, and I think that probably persists. I think the new line in the sand is about 106. It was support on the way down. Now it's going to be resistance on the way up. If 106 holds, then that's going to get pretty ugly for the dollar. I'm still thinking at some point sooner rather than later. I mean, not weeks, but months. I think we're heading back down to 97 is my guess.
How about over 106? What does that open the door for?
If we go over 106, then we start to really strongly reconsider the bear market. And so then honestly, that puts us back into play to 115. I don't think that's going to happen, but you just don't know. We don't know what we don't know. So.
Okay. So Carley, you're a writer and an author and prolific as well. And, people wanting to learn how to trade, I recommend that you get the information from someone who's doing it live. That could be your mentor in options. You want to show the different kind of books that you've written about options and your experiences in the market. And go ahead. And I really respect people that can write a book. It takes a lot of patience and you really have to stick with it. And it's not easy to do. So you're getting a lot of press on this trading commodity options with creativity. What's the theme in that book?
So these books, I've written multiple books, just so you know. So if you go to Amazon, you're going to see more books than this, but don't just ignore all the others. We've switched publishers. These are the newest and the best. So ignore everything else. And it's kind of intended to be sequential. Trader's first book on commodities is Ground Zero, everything you need to know before you actually place a trade. Higher probability commodity trading is going to get into market analysis, seasonals, a little bit of technical analysis, things like that. And then trading commodity options with creativity is exactly what it sounds like. It's basically a book that covers the basics of options and then gets into real world examples of how things can go wrong, even if you have everything lined up. And even if you're right in market direction, sometimes weird things happen. And so it gives some ideas, some basically experiences that I've learned and some ideas on how to combat unforeseen risks, as well as just the day-to-day stuff that you're always going to come along. But trading commodity options, basically in a nutshell, is everything I've ever learned, good, bad, and ugly about option trading. It's all there. So.
Okay. Well, you can't learn experience. It only happens with the passing of time and living through stuff, but you can learn from the experienced. And if you have an interest in commodity options, here's your person to talk to, get in touch with. And your business model, besides books, is that you have your own IB?
Yep, we're an introducing broker. We're a boutique brokerage shop, basically.
Okay. And do you have account minimums?
We do, but it's quite low. The minimum is 2,000. So we have clients with anything from 2,000 to millions of dollars and everything in between. We try to treat everybody the same. Our goal is to make sure people understand what they're getting into, the risks, and give them some pretty good, solid ideas and assist them from there. So we're a lot different than the bigger shops. Basically give you a platform and then they hope you never call. We're not like that. We answer our phones, our emails. We're here for you. We make sure everything's running smoothly. And if you get into trouble, hopefully we've got some good advice for you as far as adjusting risk and margin and things like that.
Yeah, full service broker
Mhm,
that
we
has
are.
gone to the wayside.
There's
And
not many left.
yeah, so thank you for surviving the Baton Death March of the brokerage industry. And we at TradeGate Hub are rooting for you, Carley, and all
Thank
your
you.
clients to have a great 2023. Thank you for your time and
Sure.
your giving spirit to share your ideas
I
here on
appreciate it. Thanks,
TradeGate
Dale.
Hub. All right, Carley Garner, everyone, follow her on Twitter at Carley Garner. So that's a wrap, everyone. Hope you enjoyed it. Bringing content to you that could help you in your trading journey. Thank you very much, Carley.
Thank you.